Eventually this market will crack. Don't know when, don't know what'll cause it, but it will eventually crack, and that downturn will be pretty significant when it occurs. So just want to be a little bit cautious about that. Here's what you need to know before the bell this morning. Yesterday, markets did fine as usual, right? Like actually nothing different than we've been having here for quite a while. Market just kind of keeps lifting higher. Doesn't really seem to be anything that can get this market down. And again, that's not surprising. We're in the midst of a very strong bullish rally here, and that hasn't changed. It's kind of every day, market just kind of keeps kind of gravitating itself up. You might have a day or two where markets, have a little bit of a correction, but that's quickly bought by retail investors in particular. We're seeing a tremendous amount of money flows. Corporate share buybacks right now are running so far ahead above their 3-year average. It's quite amazing. But that's been a huge source of liquidity for this market really ever since the April lows. But then also retail investors. In today's commentary, we've got some data on that as well. But retail investors have put $100 billion into equities here over the last 3 months. So it's just been a very, very big inflow of money into the markets. But again, just kind of pay attention to what's going on here. That 20-day moving average, this yellow line, continues to really be primary support for the market. Every time we come down to touch it, it's just been a good buying opportunity for investors. One thing to kind of note is that this market is kind of working this stair-step pattern as we go higher. And these steps are getting a little bit shorter as we go, but we're starting to look like we're trying to top here just a little bit, kind of in this recent stair step higher. Again, relative strength a little bit overbought here. MACD still very elevated on a historical basis. Has been extremely flat for a very long period of time. This is a bit unusual. It's not uncommon. It can happen. But the length where this kind of momentum in the market has just been so stable is a bit unusual. You usually get a little bit more volatility in the market, but this has been a very, very low volatility market, very compressed volatility in a lot of directions. And again, when you take a look at the imbalances that have been built up in the markets between the options trading as well as just the equity holding side, there's a good bit of negative delta to the market. In other words, if this market does have a sell-off that triggers some type of action, the actual sell-off, when we get into the rebalancing of portfolios and the unwinding of leverage positions, that's getting to be a pretty significant chunk of capital. So again, you could see a very, very sharp reversal in the markets. 3 to 5% would not be outside the realm of possibility over a very, very short period of time. The trigger for that is going to be that 20-day moving average. Again, if we take out that 20-day moving average with any type of volume increase, you're going to see a fairly sharp correction. 6,500 right now is going to be your target at the 50-day, your 100 days at 6,290, and your 200 days at 6,000. So there's a really reasonable possibility that you could see a fairly sharp contraction. I got an email, kind of yesterday talking about, well, I'm not worried about a 10% correction. It's no big deal. It's a 10% correction at this juncture of the market, given the complacency that's been built up in the market. That 10% correction is going to feel like a 20% correction. So just be aware that there's a lot of long bias in the markets right now. There's not a lot of people, buying puts on stocks. There's just an extreme amount of put hate. Call options are running at record paces right now. That's okay. There's nothing wrong with that, but that type of setup for the market is just very fragile. And so it won't take much to cause an unwind in the market. So just continue to manage your risk, take your profits, rebalance your exposures, those type of things. Eventually this market will crack. Don't know when, don't know what'll cause it, but it will eventually crack, and that downturn will be pretty significant when it occurs. So just want to be a little bit cautious about that. But again, for right now, everything's just fine in the markets. So nothing to worry about at the moment. That's what you need to know before the bell this morning.